Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Well, now with the Q4 season pretty much in the rear view mirror for all intents and purposes, let's see how things ended up after the dust settles with our research director, Shiraz Mian. How did things end up numbers-wise?
Not too bad, Terry. I have the scorecard here to share with folks. This shows the snapshot of the scorecard as of this morning. So we have 440 S&P 500 companies have reported results. These first two columns on this table, this is a busy table, a lot of data, because we have 16 sectors versus the 10 for the S&P GICS, so we have to cram in more. 88%, as it shows here, have reported results, 6.3% total earnings growth on 1.5% top line growth, 68.6% beating earnings, 57% beating revenues. Overall, not materially different from what we have been seeing in recent quarters. The growth rates are about the same. The beat ratios are about the same. What stands out is the revenue side. Revenues are on the weak side, and that's about the big picture story here.
All right, so let's talk about highlights and lowlights. You know, the Q4 season started out a little bit on the rocky side. It did seem to end a little bit better than expected, though, for all intents and purposes. What about positive standout sectors?
Yeah, the growth, as I referred to at the top, is about in line with what we have been seeing in recent quarters. There are a number of moving pieces. The common theme across all sectors, the dollar strength, the oil weakness, the global growth issues, those came again and again in all the conversations that management teams had about earnings. As I mentioned here, 8 sectors had double-digit earnings growth. One sector had double-digit revenue growth. Technology was very good. But then again, technology had the blockbuster report from Apple. Strip out Apple, and then the picture isn't that impressive. And overall, the growth picture isn't terribly bad. It's when you're looking ahead that the problematic issues start arising.
All right, let's not get too far ahead. Let's do the flip side. What about the negative sectors?
On the negative side, the most obvious is energy. Energy, as we all know, because of the oil price situation, stood out for how weak the overall growth, earnings, and revenue was. In fact, when you strip out energy from the S&P 500 as a whole, the picture isn't really that bad. But what we keep stripping out, if we strip out Apple, we strip out energy,
eventually there's not anything
there's
left.
not much left. Another week was finance. Finance didn't really have much growth. And that also stood out for its weakness.
All right, so what about, now that all of this has been said and done, the dust is settled, is there still an uncertainty around this earnings picture on the aggregate, especially with the influence of the dollar and oil?
Absolutely. There's a lot of uncertainty. The overall level of total earnings that we will most likely get to at the end of when everything is said and done for Q4 will be a new quarterly record. It's the growth that's problematic, particularly as you look ahead. And the dollar strength you referred to, the oil isn't just an issue for the energy sector. It shows up in many other areas as well. You will recall Caterpillar also warned and referred to how the situation in the oil sector is weighing on order flow for its business. So there is a concern. And on top of that, you have the global growth issues, which are indirectly related to what's happening with oil as well. So all of those, when you bring them together, add to the uncertainty about the overall earnings picture.
Now, having said all that, what are you looking for in Q1? Optimistic or not?
It's an extremely unusual situation that's developing for Q1, and I have a quick chart to share with folks. What we have here is how the estimates for Q1, and I also have Q2 here, have shaped up over the last 2.5, 3 months. As you can see here, total earnings were expected to be up 10.8% in early October. They are down now negative 5.1%. So a big drop in estimates for Q1. A big part of that is oil. In fact, pretty much all the positive growth that was expected in the first half of 2015 has now disappeared. There's not much growth in the entire 2015 now. All of those hopes have now been pushed forward to 2016.
All right, it's going to be an interesting quarter, to say the least, once we get into it.
It will be. It
All
definitely will be.
And we will come back to get into it next month with you. Thanks. In the meantime, you can always read Shiraz's comments on earnings on the aggregate for the S&P 500 and specific sector comments in his Ahead of Wall Street that appears on Zacks.com every day. And then during the peak periods in the earnings season, he has his earnings trends commentary, and earnings preview actually starts every week off on Mondays. Meantime, with Shiraz, I'm Terry Ruffalo.